Hello, today we are going to solve October 2022 paper question number 4, Ventura Capital, Part D. Explain 4 ways in which the principles of accounting might not be applied if Ventura's capital proposal is implemented. So, social accounting is all about considering local community, okay, considering environment, and also considering about the employee health and safety. Okay, health, safety, their welfare. If you consider all of those in the business, then we can say that social accounting factor is taken into consideration. So because here, and also the use of sustainability factor, okay, like natural resources being used very carefully. So local community, there was no secondary employment offered, which means there was less employment for the local community from this proposal, as nobody was recruited. And secondly, we can see that large volumes of extraction of resources is going to happen, which means there is a lot of pollution possibility. And also with there could be redundancies. There was 50 redundancies that happened, and also there was use of natural resources, which means it could become less sustainable for the future generations. Then you have evaluate the proposed purchase from the viewpoint of primary metals. So let's evaluate this. The positive points for the purchase are: firstly, there is an additional investment in the business with the purchase of these non-current assets. Okay. Secondly, the gross profit percentage at 40% seems to be good. Okay. So there was new non-current asset which was purchased using loan, which means it will add to the business for the future also. Gross profit was at 40%, which seems to be good, which means revenue can cover the cost of sales. And the economies of scale would happen because large volumes of purchase is going to happen, like increase of 50% at the reduced rate of price. So which means that, okay, there will be less unit cost, and probably this could have been due to the better and the modern equipment they are going to purchase. So maybe because of that they would do that, okay, equipment. So we can include even that uh, negative points would be the business has substantial debt of around 700,000 to be repaid within 5 years. Okay, so which means that loan increase might happen, or a non-current liability might incur to the business, which indicate that this is a risk to the business because financial investors will be looking at it. And cash flow, is it good enough to repay the loan, is also questionable. ROC was very less, okay, from around 0.1 percentage. It had from the earlier was 4.63. Okay, we could see, we had calculated it was at least around 4.63. It was good. Now it has got reduced to 0.1 percentage, which means the expenses and the costs have become high. Okay, because this might be due to the staff being awarded a 4% increase in wages and salaries. So wage cost must have increased, and also 50 staff are being made redundant. Okay, which seems that social accounting factors are not taken into account, so which can affect the brand of the business. So you could also further on explain that if certain things are not how it taken into account, how it can affect the business. So if social accounting factor is not taken into account, it might affect the brand of the business. And finally, we can say that the conclusion, they should purchase if the business has to grow and expand in size, but they should consider some social accounting factors which will then help them in the building a brand in the future. So thank you.